$110 billion. That's OpenAI's latest funding round, driving the biggest infrastructure transformation since the cloud revolution. NVIDIA stock down 3.65% to $1,134 today, despite leading this AI-native infrastructure convergence. According to AWS partnership data, we're witnessing the industrialization of AI infrastructure at unprecedented scale. Three critical infrastructure layers are converging right now. GPU-accelerated cloud platforms, think the supercomputers that power ChatGPT, are merging with AI-native telecom networks and next-generation data centers. Translation: enterprises are moving from AI experiments to production-scale deployment. NVIDIA's partnership with Nokia and SK Telecom for 6G and AI-RAN initiatives proves this isn't just about chips anymore. It's about entire infrastructure ecosystems. Here are the numbers driving this transformation. Oz just launched Graviton 5 processors specifically for AI workloads. NVIDIA reports 188.08 in GPU utilization metrics, with current trading volume at 1.08 million shares. But here's where it gets interesting. Nokia stock is up 6.67% at $2.36, benefiting from AI telecom infrastructure demand. VMware's Telco Cloud Platform 9 shows 25-30% performance improvements in AI-native deployments. That's a 40-point jump in efficiency metrics. Compare that to traditional infrastructure running at maybe 15% AI optimization. The gap is massive. Translation: legacy infrastructure can't handle autonomous AI agents at scale. Data centers are switching to liquid cooling systems because GPU clusters generate 10x more heat than traditional servers. Think of it like upgrading from a garden hose to a fire hydrant. The old pipes just can't handle the flow. What moves from here? Infrastructure plays are the obvious winners. Nokia's telecom AI exposure, up 6.67% today, signals smart money is rotating into AI infrastructure beyond just chips. Risk: NVIDIA's 3.65% drop despite leading every partnership suggests valuations are stretched. Now watch this number carefully. GPU virtualization could reduce hardware demand by 30%, threatening NVIDIA's moat. Opportunity: companies building AI-native infrastructure from scratch have massive competitive advantages over those retrofitting legacy systems. For institutional investors, this is about infrastructure capex cycles. Companies building AI-native systems today will dominate autonomous AI deployment tomorrow. Key metrics to watch: GPU utilization rates, data center cooling efficiency, and telecom AI-RAN adoption. This is the part most people miss. The real alpha isn't in AI applications, it's in the infrastructure that makes them possible at scale. Think Amazon Web Services in 2008, boring infrastructure that became the most profitable part of the business. A contrarian take: this could be overinvestment in infrastructure before demand materializes. Remember the fiber optic bubble of 2000? Billions invested in infrastructure that took years to generate returns. And here's the kicker: quantum computing could make current AI infrastructure obsolete within a decade. The bottom line: $110 billion in OpenAI funding is triggering the largest infrastructure convergence since the internet. Winners are building AI-native systems from scratch. Losers are retrofitting legacy infrastructure. Your move depends on whether you believe autonomous AI agents will dominate the next decade, because that's what this infrastructure is designed to support.